Are you interested in debt consolidation loans, but you aren't aware how to protect yourself from losing your house in the process?
Not my house again. That's my home.
Well, you're in luck because that's exactly what we're discussing about today. Number one, if debt consolidation loans are a good idea, and also some tips that will keep you from losing your shirt in the process.
If I'm losing my shirt in there, I'm going to fake a heart attack.
But before I get into that, if you're new, welcome. My name is Tamisha Holman, and I am a financial coach and the owner of the OwnTheLifeOfYourDreams.com. And it's my goal to help liberate you from all the financial chains that have you bound. So if you're interested in this type of information, then make sure you hit that subscribe button and join me on the journey. Okay, so let's get on with it.
Let's do it.
Is debt consolidation loans a good idea? Well, first of all, if you qualify and you get a lower interest rate and a lower monthly payment than what you currently have, then heck yeah, it's a great idea, okay? Now, it's only a bad idea if you get all of your loans together that you currently have, all of your debts, and you realize that you end up with a higher interest rate or a higher monthly payment than what you currently have, then no dice. Do not do it.
I wouldn't do that if I were you.
Right? There are better options out there for you. So what are some things that you should know about debt consolidation loans? Well, number one, debt consolidation loans do not lower your debt. They bundle, okay? So like Progressive, they bundle all of that, all your loans into one monthly payment. So there essentially is no cash savings. You're not saving any money by having debt consolidation loans. If you want to do that, then you must negotiate or go to a debt negotiation company that will negotiate your debts down. But debt consolidation loans will not do that for you. Also, there can be fees, all right? Debt consolidation loans can be fees, and we'll talk about that a little bit later. Also, you will be paying more over time. So all of the loans that you might have been close to being paid off, maybe in the next 2 to 3 years, will be stretched out over the length of the loan. So you won't essentially be paying off any loans quicker because you put them all into one. And so when that one loan is paid off, then all of your debts are paid off. You get it?
Yeah, I think I do.
Great. All right, so what are some tips that will help you keep your shirt so that you do not lose your house or your car? Some things that you need to think about before you get this debt consolidation loan.
Help me.
Well, tip number 5 says to check with the introductory interest rate first. Make sure you check your introductory interest rate. And so what does that mean? So you need to look at the interest rate of all of your debts first, okay? Everything that you're paying a debt for has interest. How much is it for? Okay, after that, you need to write them all down. 20%, 30%, 10%, 5%, on all of your debts, all right? And then you need to look at the debt consolidation loan fee. That fee, just to originate the fee, can give you, or just to originate the loan, the fee can range from 0.99 to 6%, all right? So you need to know that going in. You also need to look at the beginning and ending interest rates. Will this balloon up later? All right. And you need to know what it will balloon up to. All right. And if the numbers do not make sense, then run. Okay. All right. So tip number 4, can you pay the monthly payment comfortably?
Think you can afford it?
So when at the end of this loan, they should give you a sheet that tells you how much you should be paying on the loan monthly. If that is something that you can comfortably pay, great. Also look at how much you're supposed to be paying monthly once that balloon rate hits. So after your fees go up or the introductory interest rate ends, what is your ending monthly balance? If that number does not scare you, then go forth with the loan. If it does, then run! Tip number 3, make a list of all the questions you need to ask and get them answered before you sign your name on the dotted line for anything. All right, so the number 1 thing you should ask is, does the loan have an introductory rate? And if so, how long will it last? Is it 2 months, a year, 3 years? When will that introductory interest rate go away? Very important for your financial future. Also, at the end of the introductory rate, what will your new interest rate be? Okay. Do I have a fixed or a variable rate? And basically, does that mean, do I have a rate that's going to stay the same throughout the course of the whole term of the loan, or at some point in the month or in a new month, will my rate change? So this month I have 5%, next month I have 17%, and the month after that I have 23%, and then I drop down to 14%, and so on and so forth. That also will determine if you can continue to afford that actual loan. Also, if you have a variable interest rate, what is the highest it can go? You want to know that before you can sign your name, because you want to know what the highest your monthly payment will ever be during the term of that loan. Also, will the monthly minimum payment change throughout the course of the loan? Are there penalties for paying extra or making extra payments or paying the debt off early? And I highly suggest that. Make sure you get a monthly payment that is comfortable. So if you can throw a few extra dollars at it, you can get it down considerably and get it down not only more affordable, but you also can get it stop payment off early. So if your loan is 5 years, if you pay a little extra on it, you might get it down to 3 years, which is more freeing. Okay, so make sure you think about that as well, and make sure they don't penalize you for that. Okay,
This is a lot to process.
what benefits will you lose if you switch to a private loan? And I know government loans, like student loans, if you decide that you are going to switch to a consolidated loan, then they can tell you that you will lose the benefit of student loan forgiveness. So if you're like me or anything around like me, and you're in the 5th year at a Title I school and you're getting tired of those kids, but you know you can write off your student loans at the end of that year, then don't bundle it into your debt consolidation loan, because that will take that student loan forgiveness option away from you. And you work too hard to get to that point. So make sure that you know that going in ahead of time.
You asked a lot of questions.
All right, tip number 2, watch out for the red flags, okay? People are slick, banks make money when you borrow money, okay? So they're gonna try everything that they can to make sure that you borrow the money. And it's not just banks, it's any financial institution, and some are more unscrupulous than others. They will do and say anything to get you to sign on the dotted line. So here are some red flags you need to look for. Number 1, unclear answers. Circular answers. They're answering themselves with the same question that you just asked, okay? They're not being clear or defining the answers. They become impatient with you, all right? They start dodging questions. They don't answer your questions fully, or you have confusion about anything they have said to you, then run. Okay? They do not have your best interest in heart, all right? They are not trying to get you, the consumer, the best deal possible, or they may not have the best deal possible. And so you might want to explore other options. Also, if it is too good to be true, then make sure you dig deeper. You figure out if this is really as good of a deal as it seems. Because generally, if you scratch the surface long enough, something will come out other than what you expect. So make sure that you do your homework, you ask the right questions, and you stay on them, and make sure they follow through with everything that they said that they were going to do. Get it in writing, all right? CYA. CYA.
Cover your butt.
All right, and tip number 1, explore other options. Number 1, you need to fix the spending problem. Yes, there are people out there that their debt is a byproduct of something that they could not control. And if that's you, then I'm not talking to you. But there is a majority of people out there that like to spend because they see what they like and they just want to buy.
Why have we been spending so much money on whistles?
They don't think of long term. So for those people, for you, you need to control and curb that spending habit, because you're just going to end up in worse shape than what you are now.
You're losing control of yourself, sir.
Even after you get out of the debt consolidation loan process, you still are going to be spending money, and you're going to be in a worse debt if you do not learn how to deal with that spending problem. All right. But there are other options that are less costly that you can get into, especially if your debt is not as extreme. So the first one is called the debt snowball. And that is where you look at your bills, look at your debts, and you pay off your debts as according to what's the smallest debt first to the largest. And what I like about that is you get a sense of gratification earlier because you're paying off the smaller one first. So you get happy quicker because it goes away faster than, let's say, the larger debt, which will be what we're talking about when we talk about debt avalanche. Well, debt avalanche is more about if you're the highest interest rate. So you look at your highest interest rate and you pay that bill off first. So because you want to pay off the bill that is hurting your credit or hurting your financial future the quickest. So you pay, or you throw all of your money or most of your money towards that high interest rate credit card, payday loan, auto bill, whatever, until that's gone, and then you disperse the money towards the other ones as needed. So go down as far as interest rate. So start with the highest and go down in order of interest rate. All right. Next thing, which is what people generally don't even think they can do, but call the creditors yourself and negotiate your debts down. You don't need a credit counseling service. You don't need a debt consolidation loan. You don't need a debt settlement service. All you need is a phone and your mouth.
Do it for yourself.
And generally, creditors will work with you if you're upfront and honest and don't wait till, you've gotten so far behind that they want their money now. Okay. If you are upfront and honest, look, this is what's going on. This is what's happening in my life. I want to pay you your bill, but can we, change it? Can we, drop the interest rate? Can we do some other things with this to help me pay it better, quicker, more efficiently, so we both get what we want or what we desire in this actual deal? And most creditors will actually work with you because they want their money. They don't want to loan you money and not see it come back to them. So they will work with you as long as you open your mouth. The squeaky wheel gets the oil. So be squeaky and tell them what you need. And lastly, and honestly, my favorite is come up with a payment plan of your own and tell them what they're going to get. I mean, honestly, you're working hard for your money, right? You are the one that is at your job every day dealing with the BS that you're dealing with, and you come home and all of your money goes out to other people. You can't save anything, but if you come up with your own plan, it's a plan that will not only help you save, but also get your creditors off your back.
You just do it yourself.
And if you tell them in a nice way, this is how much we're going to pay you, or this is how much I'm going to pay you, this is my plan, and this is how I plan on getting out of debt in this situation, more than likely they will be on board with that. And what's the worst that can happen, right? Well, unfortunately, the worst that can happen is they can decide to send you to collections and sue you. But at the end of the day, you still have a little nest egg, so you'll be okay. No, I'm kidding. Whatever the case, you find and explore options that will work for you. That's what this is all about. Make sure that you're not doing anything financially or making any deals financially that will not benefit you in the long run.
What about money, huh? All right, because you got to think long term.
So I hope this video was of value to you. I hope it was something that you could use to help you in your everyday life. And if you want to know more about how debt consolidation loans work, then I think you will love this video that's floating above my head. So until next time, make sure that you do everything to live free. Bye now.